Hi, everyone, and welcome to the webinar. My name is Jessica Mraz. I'm the Communications Specialist with New Mexico MainStreet. Thank you so much for joining us today. We have an incredible presentation for you today, and I'm really excited that you're all here joining us today. Just a few housekeeping tips before I turn it over to Rhea. This webinar is being recorded, and I'm going to send you a follow-up email with that video recording, so if you need to leave early or you want to share it with a colleague, you can do that. We are going to be taking questions at the end of the presentation. You can type your questions into the questions tool or the chat tool, and I'll be monitoring those throughout the webinar. You'll also notice a handouts tool, and there's two handouts for you. One is the PDF of the presentation that Rhea is going to go over, and the other is an upcoming webinars list. I just want to give a plug for next week's webinar. It's called Beyond Bricks and Mortar, Alternatives to the Traditional Building Customer Relationship. New Mexico MainStreet Revitalization Specialist Will Powell and Amy Bell will be presenting on architecture issues such as curbside delivery, drive-through window retrofit, and building codes. You can register for that webinar on our website, nmmainstreet.org. So I want to talk to you a little bit about New Mexico MainStreet. We are a program of the Economic Development Department. And our main goal is downtown revitalization and redevelopment. On the map, you can see all of the districts throughout the state. And if you want to learn more about the program, please visit us at nmmainstreet.org. To learn more about the Economic Development Department and all of the ways they're trying to help businesses right now, you can visit them at gonm.biz. I also want to give a shout out to the Buy NM Local website. Please encourage your businesses to register on buynmlocal.com. That way we can shop local and support these businesses. And let's see here. I also want to give a final shout out to the census. It's very important that you complete your census and encourage your colleagues to do so as well. Please learn more at icountnm.gov. Okay, so I just want to give an introduction of your presenter today. Rhea Serna is a native New Mexican born and raised in Santa Fe. She's dedicated her professional career to working with diverse communities to create innovative solutions to land use planning challenges and affordable housing needs. She served as a policy advocate for statewide reinvestment strategies in California, worked in partnership with nonprofit organizations to integrate asset building programs into their existing services, and currently serves as a revitalization specialist for the state's New Mexico MainStreet program. In this role, she supports communities in their efforts to redevelop vacant buildings through trainings on real estate development and finance, and works with property owners to assess their building's rehabilitation potential. She is also the co-property owner and co-manager of a historic commercial building in Tause's MainStreet district. Okay, and with that, I'm going to turn it over to Rhea.
Thank you, Jessie, and thank you to everyone who's attending the webinar today. I'm going to go over 4 main topic areas with you in this webinar: rent negotiations and working with your tenants, resources for property owners and landlords, networking opportunities for small-scale developers, and some policy considerations. And I also want to point out that some of the information that I'm covering today really should be verified. If you were going to implement some of my suggestions, you should verify this first with your attorney or your accountant. And some of the information that I am covering as it relates to the CARES Act, I'm going on what I know today, and probably most of you on the call know that things are changing daily. What is a small-scale developer? It's a developer of residential, commercial, or mixed-use buildings on the scale of 2 to 12 units. The project benefits usually both the community and the individual business portfolio. The person who has become the small-scale developer on a small project or property might have a personal connection to that property via family history, or the property may be historic, or it just has a special iconic indicator for the person in that community. The person may have not legally organized themselves So therefore, they have personally signed for loans, perhaps to purchase the property or for major rehab expenses, and of course may also be funding mistakes with their own personal funds. Oftentimes, a small-scale developer is someone who manages their own project rather than paying for a property manager. And from a characteristic standpoint, usually this person is a risk taker or entrepreneurial. And also oftentimes the person will also have a regular day job besides being the landlord or developer of their project. This question keeps me up at night. What about the commercial properties that are the economic and social engines for small businesses in our cities? And I feel like this question oftentimes is not currently being addressed in the media or by the government. In many situations, tenants have been forced to close their doors and now have little to no income. Landlords, on the other hand, likely have debt on the property being leased and may not be in a financial position where they can simply forgive rent for several months. This quote for me is really the crux of the problem. We have small business tenants right now that may be barely surviving, and we may have landlords who are over-leveraged financially and are dependent on those small businesses to pay their rent so that the landlords can pay the debt on the property. If you are a small-scale developer, you've probably had phone conversations already with your commercial tenants and figuring out what to do as your commercial or business tenants now may be closed because of the public health emergency order. So some of the examples for rent negotiations with tenants can include deferring the rent payments from tenants. One example would be adding 3 months to the back of the lease or to a later date. Perhaps a partial rent abatement, in other words, lowering the rent for the time that they are closed or partially closed, waiving late fees, and using a deposit for a missed payment. And I certainly would welcome any other ideas that people have with regards to negotiating with tenants to enter those in the chat box. And at the end of the day, of course, a negotiation has to work for both parties. And, you know, depending on what the landlord's situation is, will depend possibly on what is able to be negotiated with the tenant. So if the landlord is able to defer their mortgage payments with their lender, that helps, of course. And of course, if the landlord owns the property outright, there's much greater leverage then. Our New Mexico Main Street team recently conducted a small business impact survey. This first issue or rendition of that survey was released on April 15th. And what it found of the respondents was that 60% indicated that they are having trouble paying their rent or mortgage because of the public health emergency order. This is the context of what we're dealing with today. Of course, when that public health emergency order is lifted, which is scheduled for May 15th, at the end of the day, we are hoping that all of our small businesses are still in business and that they are still tenants. What are some other considerations to consider right now during this pandemic? This may be an opportunity in some regards for a landlord to renew or sign a new lease, either with an existing tenant or a new tenant. And some of the considerations might be a rent abatement in exchange for a longer term lease, and that's with an existing tenant, or perhaps with a new tenant that's coming in, offering a rent abatement in exchange for a deep cleaning or disinfecting of that space. One thing I have been seeing amongst the real estate industry, especially with regards to commercial properties, is that tenants now, new tenants that are entering into lease agreements, are interested in having force majeure clauses or superior force clauses in those lease agreements, which basically is when there is some sort of catastrophe, then the contract can be broken. Another situation to consider right now with your tenants is because their reserves may be very low without the income coming in that they're used to, and their checking accounts or business accounts may be running close to zero. Accepting a check for rent payment could have problems if that rent check bounces, for example. So maybe it's better to have the tenant pay with PayPal or a money order or a cashier's check. And then another issue too is there's definitely a fine line between the landlord and the tenant. Usually the landlord doesn't get involved in what the small business tenant is doing, but it could be right now, because of the situation we're in, that it might be okay then to, not only be completely transparent about your own situation with the tenants, but making sure your tenants are accessing relief programs or have the information that they need in order to become more adaptable to our new normal. And one of the greatest resources that I always turn to is with MainStreet America. They've had some great information for small businesses. Their COVID-19 crisis MainStreet checklist, I think, is particularly helpful, and it does have a lot of information regarding curbside pickup for businesses, sanitation, gift cards, online presence, social media. And I have been able to get on a call nationally a couple of times with small scale developers from across the country. And one thing that resonated with me is if the landlord knows that their tenant is doing something during this time to bring, even if it's just a small percentage of what they normally earn, to bring some revenue into the business, then that landlord has said that they were more interested in working with the tenant and figuring out a way to help that tenant so that they can continue to stay in business. I did receive a couple of questions prior to the webinar right now about if a property owner would be liable for disinfecting and cleaning their space, liable in a legal sense. And I haven't seen anything in my research with regards to a landlord becoming legally responsible for someone becoming sick because their space wasn't properly disinfected. The CDC guidelines are basically what everyone is referring to when it comes to how to clean or disinfect a space, which, there's no legal requirement at this point to do that. And I also want to point out a nonprofit, nfib.com. They have weekly briefings going on, and one of their most recent briefings address this issue of workplace safety. So that's a really good recommendation that I have on that issue. And of course, Airbnb being one of the largest platforms for small-scale developers, for hosts who are renting their spaces or multiple spaces. Basically, they suggest deep cleaning, but there's no requirement, of course. And then this is the letter that they request that their hosts put in their spaces for guests. No one wants to be in the situation where they have to evict a tenant because of non-payment of rent. Right now, with the governor's order, what accompanies that is that the state of New Mexico Supreme Court has ordered a temporary moratorium on evictions of residential tenants for their inability to pay rent. Landlords and property managers can still assess late charges, file for eviction in court, and obtain judgments for unpaid rent. The only prohibition is against having the sheriff physically evict a tenant. And this order, of course, will expire on May 15th, along with our public health emergency order. And if the situation does come to where the tenant and the landlord have to face off in court with each other, the tenant does need to prove in court that they were unable to pay their rent because of COVID-19. And I also want to point out that only the city of Santa Fe is prohibiting landlords from evicting residential and commercial property tenants unable to pay rent due to the COVID emergency. And this is something that's more about residential tenants, but I did want to bring it up just so that everyone is aware. I'm sure you've heard that in bigger metropolitan cities that there is a rent strike going on. This is the map that this organization, WeStrikeTogether.org, showing in New Mexico how many people have indicated that they are taking part in the rent strike and not paying rent. You could see that mainly that's clustered around our Rio Grande corridor. And I also wanted to point out there is in California legislation right now, and it's Assembly Bill 828. And if that was approved and passes, then it would be a 25% rental reduction as part of eviction court proceedings for landlords with 10 or more units. And this, I think, in a lot of ways, sort of pits renters against landlords, and it doesn't really get at the deeper issue of, that landlords, particularly residential landlords, they need stabilized income to pay for all the maintenance they have on their units, and ultimately, at the end of the day, they are providing housing for their tenants. We've all heard, and we keep hearing almost daily about what is going on with the SBA's two different programs that they have, the Paycheck Protection Program and the Economic Injury Disaster Loan, or the EIDL. Right now, with the EIDL, there are no new applications that are being accepted, and there's two parts to the EIDL. There is the advance or grant, and there is the actual loan. So with the advanced applications, that is right now being limited to only U.S. agricultural businesses. And with the loan part of the EIDL, they are still processing the applications, I believe, that they received from the first round of funding. There's a lot of confusion around the Paycheck Protection Program. Both of these programs are applicable for sole proprietors. With the EIDL, you apply directly to the SBA, and with the Paycheck Protection Program, that you apply for that through a participating lender. If you as a landlord were legally structured and were paying yourself and documenting that payroll with a Schedule C, then you could, of course, apply then for the PPP, but it would just be for what you pay yourself. And in order to be eligible for the forgivable loan, the 75% of what you receive from the PPP has to be for payroll. And the other 25% can be used for expenses such as utilities, rent, interest, but you can't use the PPP for a mortgage payment. And I also, once again, will highly recommend visiting the NFIB. They recently had one of their weekly briefings that also focused on the financial updates as it relates to the PPP program. With the second round of funding, and that came out April 27th for the PPP, or the Paycheck Protection Program, one thing that changed was now small community-based nonprofit lenders are having access to that money from the SBA and are making loans. And I've also heard that with this second round of funding, the amount of the loan is much lower than from the first round, hopefully indicating that this is going to the small mom and pop businesses that need it the most. Two of our small community-based nonprofit lenders here in the state that are active with administering and accepting applications for the loans are Lift Fund and Dream Spring. And I've placed their contact information there for you. If you can take advantage of loan forbearance, that's something that could be an option. Mortgage servicers and lenders may pause or allow reduced payments for a limited time period. However, forbearance does not erase what you owe, and whatever missed or reduced payments that you had during the forbearance period have to be repaid in the future. And if you are an owner of either a residential or multifamily property, it's possible that you received a loan for that property backed by the federal government, either the FHA, Veterans Administration, USDA, Fannie Mae, or Freddie Mac. And if so, if you have one of those loans backed by the federal government, you are eligible to suspend payments if you are experiencing financial difficulty. And that forbearance can be initially for 180 days and then an additional extension of another 180 days. And you make that request through your loan servicer. You don't have to submit any additional documentation to qualify. There are no additional fees, penalties, or interest. And then, of course, your regular interest will still accrue on the loan. If you don't have a mortgage that's backed by the federal government, or you have a private loan, it's really on a case-by-case basis. Your loan servicer may or may not offer forbearance or deferment options. And it goes without saying, if you can continue to keep up with your payments, keep making them. No one wants to lose the property that they have invested so much time and effort and money into thus far. What are some other strategies to think about? You can certainly look at your operating expenses as related to your property. Your insurance can be very expensive. Farmers insurance may offer a 20% credit to business owners on their insurance premiums, and surely that is dependent upon checking with your individual office or agent. Both Farmers Insurance and State Farm Insurance had said that they were automatically pausing cancellation of policies for non-payment, and with unpaid balances being carried over to the next billing statement. Once again, you need to check with your individual agent on that. And then with our New Mexico utilities, most are suspending non-payment disconnects. And I also just wanted to mention what's going on in other parts of the country. Some states have mandated that insurance carriers extend payment periods or not cancel policies. And we haven't done that here in New Mexico. Another source of financing to help you through this rough time would be either an emergency savings, tapping into that, or if you do have your reserves for replacements, now's a good time to look at the money that's there and see if you can use that money. And, you know, the reason why people talk about savings accounts mostly is because they're very easy to access. You don't normally have penalties on withdrawing money from your savings account. And also keep in mind that if you do have either your emergency savings or your reserves in a savings account, there are some good products out there. You know, your bank savings account might offer you an interest rate or an APY of less than 1%, actually less than even 0.1%, whereas online, there are many online savings accounts that are available that offer an average APA or interest rate of 1.5%. And you can look at NerdWallet or Bankrate to be able to access, find out information about those different types of online savings accounts. Another place that you may be wanting to tap into is your retirement account. So one thing that the CARES Act did is this year, 2020, it allows people affected financially by the pandemic to withdraw up to $100,000 penalty-free from eligible retirement accounts. And of course, previously, if you did any withdrawal before the age of 65 or 59 and a half from an IRA, then you face, besides taxes, a 10% penalty fee. So you still will be taxed on those withdrawals, but those tax payments can be stretched out over 3 years. And with your employer account or your 401k, you can borrow up to $100,000 or 100% of the vested account balance with the repayment due date delayed 1 year. And if you are thinking about making a withdrawal from your retirement account, make sure you have in place a plan to pay the taxes and the account back. And one thing that financial advisors like to point out when you do tap into these types of accounts, your retirement accounts, is to think about the fact that you could be sacrificing your future financial security for your current financial security. And another thing that the CARES Act did to benefit particularly commercial property owners is that now you can take 100% of all your interior renovation costs for a commercial building as a bonus depreciation. And if you can combine that with a net operating loss that's calculated over the past 5 years of tax returns, there is the potential to reduce your tax payment and possibly claim a refund. And of course, you would need to coordinate, as I mentioned earlier, with your accountant to figure out how to get this done. When you're talking with your accountant, you can impress him or her with your knowledge of QIP interior improvements. And these type of improvements include installation or replacement of drywall, ceilings, interior doors, fire protection, mechanical, electrical, and plumbing. And one program that we have here in place in New Mexico, prior to the pandemic, of course, is for historic properties that are listed on the State Register of Cultural Properties. You could be eligible for a tax credit with your rehab expenses. If you need to coordinate with the State Historic Preservation Division. So if you have a registered property, if you spend $50,000 on the rehab expenses and those are approved by the state, you could have a maximum tax credit of $25,000. And if your historic building is located in an arts and cultural district, that doubles. So you would be eligible for spending $100,000 on rehab expenses and getting a state income tax credit of up to $50,000. The federal program, you can receive assistance from HPD on that, and it is a 20% federal income tax credit of eligible rehab expenses. The one main difference with the federal program and the state program is that the federal program is only for income producing or commercial properties. The state program is for commercial properties and residential properties. One of the best tools that I have been tapping into since the pandemic is an organization called Incremental Development Alliance. It's a place for people working on small-scale incremental development in cities and small towns to share questions and resources on issues such as operations, business models, pro formas, design solutions, and hiring. And there's their website, and I really enjoyed the Facebook page. We do incremental development. It's a great resource, and there's a lot of transparency with people sharing their ideas and their experiences. And finally, you may or may not consider yourself a policy advocate, but now's the time to possibly be interacting with your local and state officials. On the federal side, all states are allocated community development block grant funds. Some states are using those to assist small businesses with rent payments. Here in New Mexico, our CDBG funds are mainly being used for emergency and social services. On the county side of things, some states, some counties and other states are adjusting due dates on when property taxes are due. I know here in New Mexico that according to our state statute, you can't make those types of adjustments, and most counties are not waiving late fees or past due payments. And so we're really where we have kind of the most flexibility as citizens and residents is at our local level. And given everything that's going on and the changing nature of a lot of businesses, particularly restaurants, I think it's important for small business, for commercial business districts and for MainStreet districts to have in place mixed use zoning and flexible land use regulations. I've heard from MainStreets in other states right now that they are streamlining temporary use occupancy permits so that chairs and tables could be outside for restaurants. And one piece of information I also wanted to share with you in relationship to zoning and land use and temporary use occupancy permits is really what is going to happen with our restaurants. A retail advisor, Daniel O'Connor, and a visiting executive at the Harvard Business School is predicting that restaurants, because of what's been happening and they've been shut down and only have been earning a very low amount of money in these past couple of months, that many restaurants are going to shift their businesses to a food truck or move to the suburbs, or maybe restaurants are going to be repurposed, so becoming for-profit kitchens. So really being able to do everything that we can to be able to, for example, allow outdoor seating right now, I think is going to be very important. These are all the resources that I went over with you today. And that is my contact information, and please reach out to me with any questions and additional information, and I would greatly appreciate it and be happy to share with anything that I know. Thank you very much. I appreciate your time today.
Thank you so much, Rhea. We have a few questions lined up here, and then also go ahead and type your questions in the question panel. Okay, first question. What if the landlord doesn't want to negotiate?
That's a tough question. It is on a case-by-case basis. Certainly, having the tenant leave is really not the best option. That I can only say it's on a case-by-case basis. With the tenant, if it's really presenting maybe some options for the landlord to consider, that would be the only thing that I would say. And then certainly, I can't understand why a landlord wouldn't want to have their tenant in place, but I don't know. That's a tough question.
Okay, next question. What are the documents most relevant, or what is the best way to ask to prove financial hardship?
I definitely would say showing your bank statement, showing that you have close to zero in your bank account. For example, whatever recorded sales that you have, showing what you had back in February and what you have currently now in March. And putting together a quick sources and uses in terms of these are all your expenses for your business, and these are the revenues that you got previously or what you had gotten, let's say in 2019, if you're going to average that over a 12-month period, and showing how there's the negative right now and that assistance is needed to be able to move forward.
Okay, would you elaborate a bit more on financial security for some people, possibly recommending speaking with someone individually to assist in making good financial choices?
Well, with the two nonprofit lenders that I mentioned, I think those are two really good resources, Lift Fund and DreamSpring. Those organizations also offer that type of financial education. And I can also provide probably a list of different resources right now with organizations that are offering that type of assistance to individuals, mainly focused in the area of financial education. So I can work with you, Jesse, probably to get that list together.
Okay, that'd be great. Are CARES Act depreciation bonuses available for property purchased during the pandemic?
I would believe so, but once again, I would defer to your accountant to be able to clarify that.
Okay, and then the last question is, I'm seeing that, are you going to email this presentation to those who are registered? Yes, I am going to email this to you. You can also find the presentation in the handouts tool. And a couple more questions popped in. Okay, because of the highest interest rates in personal accounts online, is it okay to place the idle funds in a personal account in the CEO's name rather than a business account with a much lower interest rate?
The main advice that I have heard, and this is through the organization NFIB, I included their website in the list of links that I shared. They have said that the best way, they didn't talk about who should be the owner of the account, but they talked about, just for accounting purposes, that people receiving EIDL or PPP to keep that money in a separate bank account. And I would refer also to going to NFIB and attending some of their weekly briefings where you could do live questions with them as well.
Okay, next question. Do you think we will see a shift of shared mixed-use spaces as especially restaurants have to modify their business models? Is this a trend that we may see?
I think so, and that's why I recommended that local governments have mixed-use zoning and also start to enact some flexibility around different land use and development ordinances that they currently have. I think it would be great to be able to have more shared spaces and to keep these small businesses in our communities that are the drivers for creating more tourism and serving local residents.
Awesome. Okay, next question. Will DreamSpring allow only one member of an LLC to apply for their loans, or are all members needed for credit rating purposes?
That is a really good question, and I think you're going to have to ask that question to DreamSpring.
Okay, next question. Does the lease have to actually list a pandemic as a force majeure in order to enforce the lease?
I would also have to refer to the person's attorney on that question. I'm sorry, but it is a complicated issue, and it's just a trend that I've been seeing at this point.
Okay. Those are all the questions that I'm seeing. Thank you so much, Rhea, for your great presentation.
You're welcome.
And what we're going to do is email all this information out to you. Laura is saying she's having trouble finding the NFID link, so we'll make sure to include that in the email.
Okay, great.
Oh, wait, there's actually one more question. Sorry, Rhea. Are there any benefits to property owners for giving tenants a break on rents?
Nothing legally. The benefit, of course, is having your lease. You're having your tenant in place once the pandemic and the restrictions get lifted.
Okay, great. One more question popped in. Okay, is there a way to best document any discount given as far as for tax purposes?
I would say that it's always a good idea to have a month-by-month listing on an Excel sheet of what all the revenues that you receive and show how that has changed during this time period. And, once we have people start preparing their 2020 tax returns in early 2021, maybe there are different regulations that will come into place then or benefits then. But yeah, I keep tracking everything on your Excel sheet, showing what those revenues are so that you can work with your tax accountant early next year, and hopefully there will be some tax breaks.
Awesome. Thanks, Rhea, and thanks everyone for the great questions.
Thank you, everyone.